Let's rock and roll, baby.
We're back from the holidays, 2024, January. I think it's going to be a good year, man. What are your thoughts?
It's going to be nice. I like a lower interest rate climate. I like the thought of maybe a little bit more inventory. What are you thinking?
Same. It's been nice. We talked about it on the last episode. Rates haven't been moving as sharply down, and we'll get to that in a sec, as they had been leading up to our last episode, but it's been nice that they've been pretty stable in the past month. There hasn't been a lot of pressure to move them way back upwards, although we have our good and bad days. So I'm excited that rates seem to be moving into this new area, and I'm hopeful that there's more inventory, get some people under contract. I know both of us do, so that's exciting. Happy about that.
That conversation that I was having this morning when we were in the Social Health's kitchen with the agent that I met with, she's big on new construction. I would love an environment this year with interest rates where you're not worried about rates going up during a new construction phase and if borrowers will qualify or not. So it's nice to move away from that volatile market that was last year with interest rates. That's for sure.
Yeah, so I rode that exact same situation up and down. I had a borrower that went under contract in July, new construction. The home was supposed to be ready in November. I think the rate went up 2% from where we started the process to where we were in November. Thankfully, this is the one that we're closing this week. I think I was telling you about. Rates have dropped back down to where they were like last summertime. So it's, there is ultimately no change from what we thought they would be, although there were times where it was significantly higher. But yeah, if they would have closed in November, it would have been a 2% higher interest rate than what we planned on. And I'm glad that it will be the other way now for people that are going under contract to build new homes, that their rate might be a little bit lower than what we're thinking right now.
Which would be really good news. I don't ever want to stress about people qualifying ever again during new construction.
No, that's a good point, because for my borrower, that higher interest rate just meant a higher payment. But for other borrowers, that's the difference between qualifying and not qualifying. Like, this borrower could absorb the payment and it wouldn't have been ideal, but could have made it happen. But yeah, if that's the difference between qualifying and not qualifying, that's a tough conversation to have. There's nothing you can do. You're subject to the market, and it just hasn't worked out.
Such a weird area too, because like one of the ones that sticks with me is they did not qualify anymore. And it was like $70K of their own money that they put into the transaction. And this was like, some builds are what, 3-4 months. If it's like best case scenario, most of them are 6+. Yeah. This one was almost like 11 months. So riding that wave was such a weird experience. We ended up closing them, but yeah, I'm hoping this year we don't have any more of that.
Yeah, that'll be fun. Less stress is better than more stress. So one of the things that came out last week was the CPI number, which is a measure of inflation. We talked about that in previous podcasts. It'll probably be something to mention and monitor over the episodes to come. But that came back as expected at 0.3. So that just further tells us that rates are probably stable for now. I mean, if that number would have went way up, probably would have seen some pressure on rates to go up as well. Came back as expected. Rates have generally reacted well to that. So do you have any updates specifically on rates before we move on to other things?
Yeah, CPI guys, when CPI goes up, I mean, it's an index. Inflation is just not best case scenario for mortgage-backed securities, for mortgage interest rates. So now that these indicators are showing some stability in the inflation numbers, it's allowing the mortgage rates to stay stable. We're sort of reiterating what we started with, but now that you have a stable environment there, you start looking at reports within these jobs reports and manufacturing and retail sales, and you're starting to see the consumer stagnate a little bit with spending. You're starting to see a little bit of lag in manufacturing. My 20 years in the industry now has shown me with those reports that you're going to start seeing a little bit of a push of lower interest rates because you need to start stimulating some economic activity. So I think we're in the ground floor of like these things that I ramble about, that that I'm so passionate about, but it's in the area where I think the consumer is going to get a little bit of a relief in interest rates. So it's nice. It's going to be nice for us.
Good. So next time when we talk about this, we're hoping for more good news, but thanks for that update.
Yep. You're welcome.
I like the other stuff that we're planning on talking about today. We have some product stuff, some underwriting stuff, some tips that we want to give to realtors. We have an interview with one of the local GOAT realtors. I don't know how close he is or not close to being on screen right now, but we'll bring him in a little bit for a chat about his career and advice for new agents. But I think maybe we start with a loan product thing, something that people ask us a lot about, because I'll just lay the groundwork for the situation where this applies. But a lot of times people call us and say, hey, I want to buy this home. It's listed for $100,000. it looks like it needs some repairs. In the remarks, it says cash or renovation loan only. And how am I going to buy this place? So the way we do that is with a renovation loan. What are some of our renovation loan options, Beds?
So you have a couple of options. So if you're a veteran, you could do purchase plus improvements with the VA loan, which is a nice option. So that's no money down. The next tier or the next option is the FHA 203K. That's 3.5% down. In rural development, I haven't done one yet. I'm looking forward to the RD loan sort of being a bigger option for buyers in the future, but you can now purchase plus improve with RD. And then on the conventional side of things, which is a 5% down minimum, you could use that loan, purchase plus rehab. So
got some options.
We have some options. Do you like doing them?
I like doing them when I'm able to set the proper expectations up front.
Yeah.
If people think that these type of loans flow like a normal type of loan, then they're in for a little bit of a rude awakening, which can be challenging for me. But I think over the years, I've gotten better at explaining some of the nuances about it, some of the reasons why it takes longer than a normal loan. So I don't hate it at that point. I feel fine with it and able to sleep at night if I'm able to set those expectations. But I definitely want to be clear about that with people, that this is not a normal loan. It's a great outlet for people that are looking to buy a house that's in disrepair and you wouldn't be able to finance it any other way, right? Because if a home is in disrepair and the roof's leaking and it's missing copper piping and all that stuff, you're not going to be able to get that loan through conventional financing or just regular type of financing. You're going to need to do a rehab loan like this or pay cash, which is obviously something we have no involvement in. So, I'll do it for people. It's just got to make sure they know what they're in for. One of the things I want to mention, because we talk about like, okay, conventional loan, you put 5% down on those type of loans. On FHA 203K loan, you put 3.5% down. But I want to stress that that down payment is based on the purchase price plus the cost of renovations and repairs. So, for example, if you buy a place for $100,000 and you're doing $100,000 of renovations or repairs, that's $200,000 total. So your down payment is going to be based off of that amount, right? And so, how do we come up with that number for people, Beds?
So, good question. I like to walk people through this when I'm talking about this loan product. It's the reason why I asked you, do you like the product, is because I actually like the product. Not a lot of loan officers like it. And I think really the expectation up front is huge with this product. It's basically, it's not a quick timeline. You need a little bit of a rubber band effect there with the closing timelines. I don't know if rubber band effect made any sense there, but where I'm
just nodding. Yep.
Yeah. Did I just get nervous? So basically, guys, you go under contract, you need to meet with a consultant, and you also need to meet with a contractor. So the consultant part we facilitate. It's not a long process to get a consultant. It's just, how busy are contractors these days? They're very busy. And it's like, how quickly can you get a contractor to meet with your buyer and the consultant? So let's say, I don't know, that takes a couple of days, maybe takes a couple of weeks. So you go under contract, you're waiting for the contractor to meet the borrowers at the house with the consultant, and then a scope of work is determined. The consultants, I love this because the consultant's going to draw up the paperwork and make sure everything is sort of all set with that part. So it's easy for us to receive that information. But the consultant's going to be there to make sure that the scope of work is being done for the property's minimum standards when it comes to the loan. So it's not like the contractor is going to do a bunch of work and it's not going to get that property up to sort of a minimum standard. So exactly. It's nice. Under contract, sorry, but go ahead.
I was going to say it's important to know because there's two types of things people are going to pay for in these type of loans when it comes to the repairs or renovations. It's going to be the items that get the place up to the minimum health and safety standards. And then there's going to be the things that they want to do just because they want to do them. So the health and safety stuff is like making sure that all the systems are functional, the roof's intact, the house is solid and livable. The other things, the wants more or less, are things like renovating a kitchen or redoing all the flooring in the house, or things that you don't have to do but you want to do. So this consultant's going to kind of break that down into one thing that you're ultimately going to take to the contractor who's going to bid on that work for us. And that's when we know how much the loan amount's going to be and what your down payment's going to be. But it isn't until that point that we know what we're even working with. Because sometimes I've had situations where people are like, oh yeah, it's going to be $30,000 worth of work, no big deal. And then they meet with the consultant, they meet with the contractor, and it's like $80,000 worth of work. And that's a big difference in down payment. They might not even qualify for that additional amount of money. So there's a lot of considerations. So this front part of the loan is a lot of work for people. And there's money, you have to pay the consultant up front, and you got to get the contractor on board. So like these loans, people need to know that that level of coordination has to happen within the first 2 to 4 weeks. But once we have it out of the way, once the contractor's given us the quote and we know how much it's going to cost total, that's a normal loan from that point. And then it's easy. It's just the hard part is that first 30 days. So nowadays, a normal loan is closing in, let's say 30 or 45 days. I mean, I think 45 days is probably a little bit longer than what's really needed. You probably need like 30 days to close a loan at this point. These renovation loans are probably 60 days. Add another 30 days to kind of coordinate all the schedules between the consultant and the contractors. Contractor has to give their resume. They have to get their insurance. A lot of these contractors are not great with tech and paperwork and that sort of stuff. So, there's a little bit of tracking people down to get paperwork. So outside of that, all of these loans are great. So if you have a property, or someone that has a property that you need a renovation loan for, like we do it and we do a good job of it.
Yeah. So it's like go under contract, consultant, contractor, scope of work, final numbers determined, comes back to Chris and Randy if we're doing the loan. We're Chris and Randy in this case. We're going to do the loan based off of that number, so which is purchase price plus the rehab costs. And it's like typical flow from there, guys. At the closing, the seller's paid off. Real estate commissions are paid like they typically are. So there's nothing different there. Nothing looks different with that. On our end, once it is closed, we're going to release a certain amount of that money to the contractor to get the work done, or the milestone of work that the consultant and the contractor went over. So there might be 3 phases of work that needs to be done, and the contractor's getting paid 3 separate times. That's what the consultant and the contractor goes over. So it's a lot of work on our end, but really it's not if you know what you're doing. And I mean, I think the thing is like, I want to relay that these are loans that can be done and we do them often, and it's not a hard process. It's just a little labor intensive.
Yeah, definitely. So great loan. Ask us about renovation loans anytime. We'd be happy to talk about it. Next thing that we wanted to run through, underwriting tip this month. And the thing that Beds and I wanted to talk about was weather-related escrow holdbacks, since we are in the dead of winter. Tell me your thoughts on escrow holdbacks as it relates to underwriting.
So issues that come up during the winter: flaking paint on government loans, maybe loam and seed on a new construction, maybe a driveway that needed to be done. So you're going to get a certificate of occupancy in these cases, but on the financing side, these things need to be done. So it doesn't prevent us from closing your loan. We're going to hold back whatever the cost is to remedy those items, and whatever they are, it's transaction specific, but you need to get a quote. Yep. From either a licensed professional or somebody in the trades if they don't need to be licensed. If
that quote needs to be signed by all parties, just so everyone's on the same page. That's important. Just both buyer and seller have to acknowledge it.
Randy, 2 different things, and I'll let you explain this. Yeah. There's either a seller holdback of escrow or a buyer. What's the difference with those?
Yeah. So it really just determines how much money we're going to hold back. So, and what Beds is referencing is who's paying for this money. So let's use an example that I'm dealing with right now, where a driveway is not going to be able to be completely finished, and we still obviously want to close, as opposed to waiting for that driveway to be installed in the springtime. So contractor put together their quote, it was say $1,500 in this case. If the buyer is setting that money aside into this side escrow account, again, an escrow account is just a place where that money gets held until the work is complete, and then we release it. So if the buyer is putting that $1,500 into it, they only have to put in that $1,500. If the seller is funding that, then they have to put 1.5 times that $1,500. Again, this is an example. So instead of $1,500, it ends up being $2,250. But that's not a fee. It's not a money that they're going to lose. It's just money that is held there until the work is complete, and then it is released. So in the springtime, when the driveway is installed, or if in another situation it was flaking, peeling paint, or if it was the lumen seed, the money is released once we prove that stuff is finalized. So it's just a way to ensure that it does get done, because say the buyer never makes a mortgage payment and the bank forecloses on the home, but that driveway was never done. Well, they have the money set aside. The bank or lender, doesn't matter if it's Norcom or anyone else, they have the money set aside to pay for that. So they are protected in that case. And that's what the idea of all that sort of stuff is. So a lot of times people are like, hey, can we just escrow holdback for this and that? The most common uses are for like weather related things in the winter. And that's going to be from October basically till April.
You just dominated that. No big deal.
No big deal. So I
Yeah,
thought that
no
was
big
a
deal.
timely one. So we figured we'd share that one. Other
Um,
stuff.
real quick is that you do have to, it's a couple $100 basically, where there's some admin stuff on the backside where we need to verify the work is done. So, we got to get an appraiser out there to verify the work is done. So that appraiser needs to be paid. So
Yep.
it's the escrow or the quote amount plus a couple $100 for that. So,
Yep. So definitely can be done though. So no worries there. Before we bring Leo on, I thought we'd have some fun we were talking about this before, just some tips that we can give to realtors for things that we see on our end that we always thought maybe it would be helpful if they knew these things, but we never mention it just because it's easier to keep our mouth shut sometimes. So if any realtors are listening to this, there's a few tips that we want to share. Did you want to get started, Beds?
Where do we start, Randy?
We could write a book about this also, just so you know.
We could.
Yeah.
I think two areas that I'd like to be in. Where's the appraisal report? Number one. And number two, the commission paid by the buyer. And why that doesn't appear on the settlement statement at the end.
Or at least sometimes doesn't.
At least sometimes.
And when it doesn't, why it might not.
So things go fast in our industry. And title people aren't perfect. We're not perfect. But just to relay, a commission paid to a real estate agent from a buyer is not an APR item. So on the mortgage side of things, technically, where there's no responsibility of ours to disclose it. But if you do tell us up front that there's a commission due, we can put it on our documents so the client can actually see, okay, here are the closing costs plus the commission that I'm paying to the real estate agent. So it's nice to get that up front, but also if it doesn't appear the day of the closing or the day before the closing and you're getting the settlement statement and you're like, hey, where's my commission? The number one thing is don't think you got to call the mortgage company, because really it's nothing that our closers are doing or anything. It's just the title company, the processor at the title company. Just let them know. They'll add it to the settlement statement, and then it just gets added to the final numbers. So that's really where it starts.
I want to piggyback on a couple things of that. I think the assumption on our end is that a buyer is not going to be paying any real estate commission unless we're told otherwise. It's not like it's a super uncommon thing for that to happen. We certainly work with people when buyers have to pay a portion of the agent's commission, and that's totally fine. But I think if we don't hear anything from anyone, we would just assume that they're not doing that. So we would just operate as if they're not paying any commission, because that probably is the more common thing. The only way we would know that is if you told us ahead of time. So there was no mechanism for us to know that a buyer is paying that unless you go out of your way to tell. And I'm certainly not asking. You're probably not asking. So sometimes in those scenarios, it's like, where's my commission? Please know that, we just had no idea that there was a commission. And we're only finding out at the very end because you gave your commission statement to the title company. And it would be nice to know. So the advice I would say is, please let us know so we can have an accurate representation of what the money will be due from the buyer, because I think it's tough to tell a buyer the whole way along through the process that they're going to owe X. And then when we get to closing, it's X plus the remaining commission because we didn't know about the remaining commission. So if we're able to tell them up front, I think it makes the whole thing a lot smoother. And plus, sometimes, I hate to say this, but there are situations where the borrowers barely have enough money to come in with what they owe for the loan between closing costs and the remaining down payment. And they're going by the skin of their teeth. And then you add an extra $2,500 in a buyer's commission. And that's like the difference between things working and not working. And that's a tough situation to be in. So the advice would be, tell us if there's extra buyer paid commission. And then the other piece is just understand why we don't always know about it, just because there's no mechanism.
I should add that there isn't anything in place that prevents the lender from adding it. So I just want to advise you guys, it's legitimately you guys just making sure that the sheet that you fill out with the title company, just make sure the processor's, putting it on there correctly. So if it's not there, the call is to the processor.
Yep. Do you have something else on the appraisal you want to add?
Oh, yeah. So I get asked a lot, Chris, where's the appraisal? Randy, are you asked? Randy, where's the appraisal?
I get asked quite a bit. Yeah.
Yeah. It's tough to say I don't know.
Yeah. But these are your appraisers, Chris.
these are my appraisers. We place the order. We have the AMC in house. We like to brag about how awesome our AMC is and our boy Ellie, which, I mean, communication is so awesome having that in our backyard. But like at the end of the day, guys, we're all held hostage to the appraiser. So listing agents should probably write down the name and number of the appraiser that they are going to let into the house. And at any point, if you're curious of where the appraisal report is, I don't mind the question. A lot of times I turn around and I'll ask Ellie, hey, what's the deal with this appraisal? It was due in on this day. We don't see it yet. And Ellie's just turning around and, calling the appraiser, and hopefully the appraiser is going to respond to an email or a call. So
we've had times they've gone totally MIA. I mean, I've had appraisers that did not respond. They blew through the due date. Week goes by, nothing, crickets. And then we'll get it on the following Monday morning with like no explanation of why it was late. And obviously we don't want to work with people like that. And it's up to us to reevaluate whether or not we want them on the lists. But the reality is there's not that many appraisers. So it's like we need to find ways to work with these people and not just cut off everybody that was a few days late on their report. Otherwise we'd have no appraisers to work with.
Things got awkward when things were really, really busy. Yeah. I mean, appraisers were hiding. So we don't want to give the impression that that's the market or climate right now.
But not at all.
Guys, if you are wondering where the appraisal report is and you're a listing agent, it's so much quicker to just pick up the phone and call the listing agent, because we got to go through back channels to get that answer. And it's, how frustrating is that, by the way? It's like
frustrating. The things that are toughest in these transactions are the things that we have little or no control over, and this is the perfect example. We place that order, we get a due date. There's no sense in following up before the due date, and then once the due date comes and we don't have the report, then the AMC starts following up on a daily, sometimes hourly basis, depending on how much urgency we're applying. But like, just know that if we don't have the appraisal, it's not because we're sitting on it. We get the appraisal the same time the customer gets the appraisal, but it is a little bit out of our control.
Any other like items that you could come up with?
I have, I don't know, 1 million. So why don't we save them for the next podcast? Every time we'll break out a few, just because I want to bring on Leo to chat a little more, and I don't want to go too long, but I have some good ones. I think we could probably incorporate a few. So for any realtors that listen from a month-to-month basis, they'll maybe learn a couple different things and might educate them through our process. So I'll share some next time.
Can I lay some tracks on our next guest?
Let's do it.
So Leo Bourgeault is an agent in York County. He is on the backside of his career now. He's enjoying his time. I'm sure his wife has been trying to enjoy his time for the last 20 years. She's in the other room looking at me right now. I'm at Leo's house. But Leo was really huge for my business. He took a chance on me when I was a rookie loan officer. One of the greater people to work with. I don't think I've ever seen Leo not be happy. And if he is not happy, it's because I don't know why he wouldn't be, because there's always been a smile on this guy's face. But started in the early 80s, and here we are in 2024. He's still helping people out now, but he's not doing it at the pace he used to. Mm-hmm. And one of the greatest laughs on the planet.
So, well, then let's bring him on.
All right, let's do it.
Thanks for coming on the podcast, man. Me and Chris were talking about, let's have a local realtor on, and we got talking and we said, who'd be a great person to have on is you, just with all your experience and some of the things I've learned from you too. He's learned from you. I figured we'd have you on to chat about that. So,
all right. Well,
what's business like for you nowadays?
Well, it's winding down a little bit, but that's okay. I don't mind it at all. Still out there though, most every day, talking with other brokers and buyers and sellers. Still doing it.
How long has it been?
38 plus years. Made 38 years last September.
And what made you get into real estate?
Oh, here we go.
Let's go.
After serving a 7-year stint in the U.S. Army, I came back home and went to work for Nike. And when Nike, 79 to 85, when Nike closed in 1985, I met a lady upstairs, Mrs. Langevin. She said, Leo, you'd be really good at real estate. You should join my husband. I said, fine. So I joined Bill Langevin at that time, and everything started for me because as Nike closed, people were transferring to Oregon. Mm-hmm. Guess who they listed their property with?
That's a great in.
Yeah.
Well, how big was Nike back then? Bez, me and you
Uh,
talk about Nike being there. It's
Yeah.
kind of a cool little thing that Nike was in
Yeah.
town. But how big of a place was that? A lot of workers?
we had 1,200 employees here in Saco.
Yeah.
And I got to know most of them because I worked in both the factory and in the office.
Mhm.
So I knew the office personnel and I knew the factory personnel. So it helped me out tremendously as they were transitioning. So did I get business from that? Darn sure I did.
Absolutely.
Darn sure I did. So after that transition, I went to work for Bill. It
Yep.
wasn't very long. I only stayed with him about a year. And then I got an invitation from a gentleman by the name of Ray Jansen. He used to own an auto body shop here in Saco a long time ago.
Mhm.
And he wanted to start a real estate office in Waterboro. We were the first real estate office in Waterboro back in
Waterboro must have been so different back then. I mean, it's still
yeah. There was no Hannaford, none of that was there.
Yeah.
So it was quite the experience because we started not only selling property up there, and we started a modular home company, did general contracting. We owned a carpet flooring place. Unfortunately, a lot of those people are no longer in the business. It was quite a while ago.
Yeah.
And that's when I transitioned to Coldwell Banker in Saco with a couple of guys by the name of Doug Hooper and Bob Farraco.
Yeah.
But all the time, what I did is I got involved with things. I was involved with the factory, so I got a lot of business from them as they transitioned out, and some even transitioned back. I still get business from Nike. You'd be surprised how many people are still out there that worked at
Really?
Nike.
Wow. All
Yeah.
right.
Yeah. And the other thing I did was I got involved with the city. I was on the planning board back from 88 to 91. But I knew a lot of the city staff because I went to school with some. I mean, I just got to know them. So I got a business there as well. And another neat little trick that a lot of people don't realize is I used to go every Tuesday. I'd go out on the street and I'd go pay my bills in person.
I was hoping you'd say this. I was hoping you'd say that. Bez and I were talking about this.
Yeah.
It's such a sneaky little tip, like you got to know everybody by, I hate doing that. I pay everything I can online, but if you paid things in person, you would, be like, oh, hey, Leo. And then you'd get to know all these people from all these different companies.
Right. And I never had to tell them what I did because they knew.
Yeah.
They had a real estate question. I'm there. Bang. It just helped. It helped me grow my business. And it was a lot of fun too, because I got to know everybody. I mean, I'd go to the water company. I get business out of the water company. Yep. Business out of City Hall. Yep. And then I joined La Kermesse. I stayed at La Kermesse board for 27 years.
Yeah.
I get to know a lot of people coming in and out of La Kermesse. And plus growing up in Biddeford Saco area was a big plus. So all my parents, generations and stuff. I mean, it's all just built. And now I'm on the other side of it. But it's been a great career, no regrets. And I just have fun doing it.
Yeah. I wanted to hop in real quick, Leo, because you mentioned that you were out in Waterboro and you transitioned real quick to the Coldwell Banker thought. I think you meant to say Prudential Prime Properties, then to Coldwell. Oh,
Nope.
So it was Coldwell?
It was the Coldwell Banker in Saco. It used to be Coldwell Banker Mariner. That's where the State Farm office is today. And then from there, when times were a little tough back then in the early 90s, I transitioned to Prudential Prime Properties, which is now Berkshire Hathaway. And then from there in 2006, I joined Coldwell Banker Realty, which is where I'm still at today.
2006, that just seems so crazy because my career started in 2004. Well, the tail end of 2003 and those first 2 years and change working with you went by really, really fast. It actually almost seems like you were there longer. Bob Willett was a big influence in your life. Can you talk about him real quick? Let us know who he was. And
Bob was a great guy. I knew his whole family, his brother as well. He had come over, when we were wrapping up Coldwell Banker Mariner, he says, come over to me and I'll guarantee you'll make all the money you need. And he was right. I made a lot of money back in those days. I was always at the Prudential conventions and stuff. I was always on stage. it was quite humbling, but also quite exciting.
Mhm.
So, yeah, and he was just a great guy, great family man. His wife is still around. I just saw her the other day, just before the holidays, matter of fact, Lisa.
Yeah.
And she's still out there, and I just love the guy.
Mhm.
And Leo, you mentioned money, and it's like I don't want anybody listening to this to get an impression about how money was for you, because
Nope.
some people look at us a little differently when it comes to that, because the more successful real estate agents are ripping it and making decent money. I would love to comment, or maybe have you comment on, I think it was just a byproduct of how hard you worked and the amount of
Mm-hmm.
people that you knew. And it's like, I don't think you ever mistreated the fact that the money was there, the transactions were there. You've always been super generous with people. You've always, behind the
Mm-hmm.
scenes with me, anytime I asked you for anything, for any of the various things that I've sponsored, you've always said yes.
Yep.
So,
And that's another big part of it. I always focused on the transaction, not on the reward at the end. I knew the rewards would come. If you do the transactions, the rewards will come.
yeah.
I never counted on it. I just said, and there was times when it was really rough, family of four. And when the market sunk in 1991, I worked all day in real estate, never gave up, went to the office every day,
Mhm.
and still worked at the bowling alley at night. Way back when, Vacation Land Bowling. Did I
Yep.
get business out of that? Yes, sir. I did. But just by knowing people. Did I get business from La Kermesse? Yes. Did I get family, friends? I just built it just by knowing people and them trusting you. That's a big key.
Mhm.
Leo, you had one year, and I think it was in the 80s, you said to me. So Leo was describing to us how, things have gone well for you, Leo, over the
Mm-hmm.
years. But a
Yeah.
couple of those lean years, what did you say? You had like 8 transactions one year, which did bring you to the bowling alley. You
Yep.
were grinding
Yeah.
to support a
There's
family of
hardly
4.
nothing.
So
It's
it's
rough
not,
to support a family on 8 transactions back then. It wasn't like money for today.
yeah,
It was a little rough. I mean, I can remember, we'd go ask for help, and they wouldn't give us help because the car was worth too much.
Mhm.
yeah,
Think about that.
yeah.
And we'd have to go to my parents, get some food and stuff. I mean, we all go through the hard times, and it's a lesson learning is what it is.
Do you ever just look back at it and it's just like a snap of a finger of how much time went by, or do you remember
Mhm.
intimately how hard that was?
I remember all aspects of it.
Yeah.
Another big aspect was helping my family. I've helped all my siblings. I helped my parents, and that brings back rewards tenfold.
Leo, just before we let you go, what advice would you have for people starting in the business? Like, what do you tell these new agents that come into Coldwell Banker? Is there anything in particular?
Well, I'd say get involved, get to know your fellow agent. That's a big thing. I was on the York County Council for a long time. I went through the chairs, and I was the president in 2020. But by doing that or being involved with the council, I got to know most of the agents in York County. It was amazing. And again, always support the stuff that they did. We gave money away, scholarship money. We've done, food drives. We've done blood drives. We've done, you name it, we've done it. And you got to be there to support it. And also a year that I was in there, we did something for the homeless vets. Since I'm a veteran myself, that was really close to me. So it's been great. But if they get involved with, at least with the Realtor organization, so they work together with the agent and they can put a face to it.
Mhm.
And you got to work together. You can't be in adversarial situations. You got to be together. That's, and you work on a
Without a doubt.
transaction together, you'll have a happy ending.
Yeah, that's great
Um,
advice.
Randy, it's interesting for us because we're in this, like, here we are recording a podcast with Leo. Leo, I bet you never thought you'd ever be on a podcast, but you've got reels
Didn't
now.
even know what they are.
Well, hey, I'm glad we could be your first one.
Yeah.
I'm I'm actually in Leo's house right now, so I could set him up so he could do this with us. Leo, it must be so interesting for you to, like, you work around Facebook. I see you. You like some
Yep.
things. You comment on occasion. I know you were
Yep.
like hesitant to get into social media.
Yeah.
What is it like for you? And I think the message that Randy and I were really trying to come across, or the value we want to give other agents, is like talking to other human beings, and you are
Mm-hmm.
obviously really good at that.
Yeah.
Would your message be like, even though you're really good at doing videos and doing reels and podcasts and stuff, just don't forget to talk to people.
Yeah.
Don't forget.
I
Right?
basically, you got to imagine when I started, it was only face to face. Didn't have cell phones, didn't have beepers, you didn't have a computer. I mean, you had a book that came out every 2 weeks. So you had to basically get to know all the agents in your office and other agents around your area, because how are you going to find out about a new listing? You get a 2-week period where you're just working through the book.
Yeah.
But if you knew a lot of agents around you, again, being involved, they'd call you, hey, I got this coming up. You got any buyers for this? Boom. Or I'd do the same for them. I'd call them up, hey, I'm listing this. I still do that today. If I got something coming up, and I tell the people in the office, I tell people at cribbage.
Love it.
So, I just do. I was at cribbage last night telling somebody about a listing I got coming on the market on Friday.
Sorry to interrupt you. I want to give a perspective. If you don't know Leo, Leo, I think probably one of your biggest years when you had Leo's sold team was within the last 10 years, and you did over $50 million in York County. Is that correct?
No, that was 2 years worth, but I did 120 transactions. And this was in 2004, 20 years ago. I did 120 transactions, 28 million in sales at that time. I mean, that's when my sales were, 100 to.
I was going to say, just think of what the average sale price is. I mean, $28 million would be a good year for a lot of people now.
Yeah.
Back then, it's like, that's mind blowing. Really cool.
Yeah, it was crazy. But also, I worked 80 to 100 hours a week way back when.
Yeah.
Like you said earlier, my wife has been wanting me to slow down for a long time. So I'm surprised I'm still here, to be honest with you. But it's coming to that time because I see the generational shift. A lot of people I knew when I was doing pay your bills and all that stuff, a lot of them are retired. Some pass away. And now the younger ones are coming in. They're very well versed on computer stages of this business. Myself, I do okay. I can keep up, but with all the changes that come each and every year, it's tough. It's tough for me. I know it's easy for the younger generation, but it's tough for me.
Well, listen, I appreciate you taking time to come on the podcast. Loved hearing about the career and the stories, and I think you shared some great advice. So I'll look forward to getting this out for people. I think it's really cool. So.
Well, thank you. Thank you for having me. I appreciate it.
Team. Thanks for doing this, Leo.
You're welcome. You're welcome.
Thanks, bud. All right, that was great, huh?
Yeah. What do you say when your career flashes before your eyes, when you look at somebody that gave you an opportunity, and it was just, it's always been an honor and privilege to work with him. Yeah. So earning his respect was like one of my career highlights. So yeah, I love me some Leo.
That's cool, man. I think about people like that in my businesses. I have Leos in my business, and you probably have other Leos too, like in the sense that there's people that took a shot on you, trusted you, helped build your business, and it's just great. And Leo's one of the great ones, so it was awesome to have him on. Go ahead.
Yeah, I was just going to say, I know we kind of want to wrap this up, but I actually met Leo because of the Homes for Sale book in the Journal Tribune. So those of you that are listening to us that remember the Journal Tribune and those Homes for Sale books, Leo Bourgault's name was all over it. And when I was like 21, 22 years old, I was like, I'm going to call Leo Bourgault and see what it's like to do real estate. And here I am sitting in his house in 2024, Yeah,
it's recording a podcast. Wild.
Recording a podcast. It's so crazy.
Yeah. All right, so we're gonna wrap up. Only things that I'd want to share is that we have a couple things coming up. I mean, we're going to continue to do the podcast on a monthly basis, but next month we have a homebuyer class that me and you are doing together, which will be kind of fun.
Yes.
We're going to be doing that in the office tail end of February. We'll share that online. Most of the people listening to this probably wouldn't be interested in that sort of thing, but we are excited to be doing that in the office, get some people in there, see if we can drum up some business that way. And then in December of this past year, 2023, we held a Ask the Appraiser event, which we fit 20 people into the office. Ellie from ValueQuest came up and talked. We thought that went pretty well, so we're going to do another one of those, not Ask the Appraiser, but it's going to be Ask the something, which we're still figuring out, whether it's Ask the Underwriter, Ask the Renovation Specialist, Ask the whatever. But we're going to be doing that in March, so we'll be sure to share that. And if we can fill the room with 20 people that would find it beneficial, we'll definitely look forward to it. What are your thoughts on that stuff?
I just think given value is something that we want to dominate this year, and this is the way that we're going to do it. So we hope everybody enjoys, the stuff that we put on, and, we'd love to see you in the future. For those of you that have been asked that you couldn't attend, the invites are going to keep coming, and we hope to see you in the future, obviously. So
Love it. All right, bud.
All right, man.
I think we're good to go. So we'll catch you next month.
All right, guys. Thanks for listening.
Thanks. See ya.